Welcome back to the Covered Caller, everybody. My name is Max Convexity. I really appreciate you guys being here. Now, today's a special day because we have a founder in the house. We have a big shot in the option business and in the ETF business with Mr. Matthew Tuttle. Hey, Matt, would you like to tell us a little bit about yourself? Give us like a 2-minute Reader's Digest version of your background and how you got here.
Yeah, so I'm an ETF issuer. We've got 5 billion under management, 50 something ETFs, but I'm also an active trader. So I've been investing in markets since 1981. I got hooked in a middle school investing project. Sometime in the 90s, I really started loving options, and now most of my portfolio is option based. So big fan of options. We've just started on the ETF side. We're known for levered and inverse, plus stuff like, we did the inverse Kathy Wood, the inverse Jim Cramer, because I like to kind of call out hypocrisy when I see it. I mean, I'm kind of a refugee from Wall Street. I saw what used to pass for advice and ran kicking and screaming. And, now I'm really passionate about trying to give, investors an alternative to some of the traditional stuff going on in Wall Street, and just love what I see going on on Twitter and on the Discords of people who have broken from Wall Street and are doing some really cool stuff on their own.
Yes, absolutely. You definitely have a reputation as a disruptor. Your company does. I wanted to ask you, let's talk first. Well, first of all, I was noticing that it said in your website that you had been trading for 46 years, and I was doubting that because you look about my age, or you look younger than me. You look 10 years younger than me, and I haven't been trading.
I'm way older than I look. I'm 56.
All right, I'm 59. So we're about the same age because I was in middle school in the early 80s also. But anyway, no, that's awesome. I started trading with my dad on my dad's account a little bit in 86 and 87. So I guess I could say I've been trading that long too. But anyway, no, you've really been doing it though. Is that trading's your passion, isn't it? That's the idea.
I love the markets. I love everything about the markets. I always have. It's a game where you've got to know what you're doing, but if you know what you're doing, the rewards are amazing. And and you see a lot of the success stories of, there are people on Twitter who have amassed, millions from trading, and you just love to see it. Again, Wall Street will tell you be happy with 8 to 12% a year, and I'm always, but why? I mean, if you know what you're doing, you can do a lot better than that.
Absolutely. The great thing is nowadays, in my opinion, you don't even have to know what you're doing because there's people out there like you guys where you can buy an ETF. I guess ever since the rule came out, the derivative rule or something in 2019, the whole ETF world has opened up to option trading. Would you like to comment on that a little bit?
Yeah, I mean, I think more along the lines of it shows the innovation that's happening in the ETF field, because when ETFs first came out, it was only indexes, and that's all it was, and mutual funds dominated. Now you've got so much going on in the ETF space, and options was an obvious kind of route to go. The covered call strategy, for example, has been out there for as long as I've been around. I don't like the way it's morphed necessarily, but it was bound to do that.
Yeah, that's how I got here. My dad and my family always sold covered calls since the 70s and into the 80s. And those were some of my first trades, was my dad explaining to me why he was doing a covered call. And sometimes he would just sell a put in a stock he wanted to buy. Anyway, so I was hooked just based on my dad. But then actually my first trade ever was in 87 when United Airlines was getting taken over. I thought I was a risk arbitrager for a merger arbitrager I watch too much CNBC.
We ought to compare notes. So
Yeah.
in college, I was in college from 86 to 90.
Yeah, me
we
too.
were trading options based on takeover speculation.
Yeah.
And I thought I was a genius merger arbitrager myself until Michael Milken went to jail. And I never made a dime on merger arbitrage after that. So that was an interesting lesson.
Mine was United Airlines, and I remember the guy that owned the Raiders was in on it supposedly, and then was going to make a bid, and then Trump was going to make a bid, and I talked my dad into buying like 5 call options for us, even though my dad always told me buying call options is a sucker bet. But anyway, so he called up his broker and said, "Look, we just want to take a little chance on this. Hey, we bought 5 call options on United Airlines." And within a couple of weeks, it made $5,000 or something, which is the most money I'd ever thought of as a 18-year-old kid. And I was hooked from there. I was hooked. I love the leverage, love the action. But in my adult life, I've turned into an option seller.
I do a mix. I do not sell covered calls, and we can talk about that. I'm not a fan.
Yeah.
I do sell puts, cash covered puts, sometimes put spreads, and then I'll buy long-term calls as well, on stocks I like. I like to have a mix of both.
Absolutely. Absolutely. Okay. Well, I have some questions more specific about your funds. I guess the first one is BITK. That thing that's a disruptive type fund. That's all I heard about for a couple of weeks. Tell us a little bit, what's the BITK strategy and what differentiates that from the other million funds out there like it?
Yeah. So, at its core, we're tracking IBIT. So we've got a synthetic long position, which I assume your viewers will understand. Mm-hmm. We're long a call, short a put. And then we're writing options against it. Where it is different is we are doing it 0 DTE. Or sometimes 1 DTE, but we're out that same day. And what we realized, so you might know, IBIT doesn't have listed 0 DTE. It only has Friday listed.
Yes.
But when you're in the institutional space, as we are, you have access to something called a flex option. And a flex option is basically, where a listed option is buying a suit off the rack, a flex option is having something custom made. So I can go to my, any of my brokers and say, all right, give me an option on IBIT, make it the strike price 63.21. I want it to expire today. I want it to be European. I want it to be cash settled. I state everything I want, and they come back to me with the price. If that works, I sell that option, and then I cover it at some point later in the day. And the beauty of that, in my mind, is overnight and over the weekend, we're not encumbered by a call option. Because that's the issue I have with covered calls. I'm fine. You want to sell covered calls on Procter and Gamble and Coca-Cola, do that all day, every day. But like MicroStrategy and Hood and some of these names, I mean, you're giving up your upside. That's never made any sense to me.
Yeah, I'm with you on that, and we talk about that a lot in my Discord about that same topic, trying to preserve upside. Let me ask you. So on BITK, you printed like a 300 on for your first dividend payment. That seemed kind of high. How what was going on with that? And of course, it's come down since then. That seemed like kind of an unrealistic dividend. How did that happen?
So a couple of things. The beauty of not being encumbered overnight, when something gaps up, you've got all those gains.
Yeah.
So, we launched at a perfect time, and we had like 2 or 3 days where it gapped up, and we had insane returns. So it comes to dividend time, and I'm sitting there, what do we want to distribute? And the trader in me is like, you know what? Yeah, we're going to distribute the income, but I want to distribute some of those gains because I've always looked at it from the standpoint of when you're there patting yourself on the back of how well you're doing, take your profits.
Yeah.
And I couldn't get away from that. So some of that first distribution was profits. Turned out I was right. And, and IBIT went down from there. That's not sustainable. Going forward, I think my goal is somewhere in that 30 to 40% range. But there'll be times where I'm patting myself on the back on how well IBIT's doing. And I'm going to say, you know what? Let's distribute some profits here.
Yeah, some profits from the upside, from the NAV capture. No, that's awesome. That's kind of what I figured, but I just wanted to confirm it. Let me ask you, so you use ODTs, but you use flex options. And I would think the main reason for flex options also is the settlement issue. Don't you do a European settle and just let it go to cash?
We do them European. They are cash settled, so we can just let them go poof.
Yeah.
Typically, what I like to do is, if I'm sitting here and it's 3 o'clock and I've got a profit, again, my trader philosophy is take your profits before somebody takes them from you.
Yeah.
So, people are, systematize it. No, I mean, we're sitting here, we're watching the chart, and if we've got a profit, we're going to take the profit and be happy with that. So sometimes, sometimes the thing tanks. Yeah, all right, we're just going to let it expire worthless. But, the market doesn't work out that way all the time. So, other days, typically, any security, regardless of what it's doing, at some point during the trading day, it's going to dip. And we're watching. It dips. Yeah, all right, we're up 30 basis points. Let's get out and we'll rejigger next day.
Absolutely. Well, let me ask you this: do you how far out of the money do you go, or are you using a target? Or are you looking at how do you decide where to set your strikes?
So it depends. What we've done is we've looked historically at IBIT. So we've looked at a couple of things. When it opens up, is it likely to close higher than the open? If it opens down, is it likely to close lower than the open? If it gaps up, is it likely to keep gapping? If it gaps down, is it likely to keep gapping? So we're looking at a lot of that stuff and really picking our strikes based on that. I mean, what we've found, historically is if I set my strike 1.75% above the current price, that only about 16% of the time does the close exceed, are we in the money? So that's a baseline that we use, but then we use judgment from there.
I got you. So what delta is that? Would that be like a 15 delta or something? I mean, because you said it only goes in the money 16% of the time, doesn't delta roughly equate with the odds of it going in the money?
Yeah, no, I'm not looking at it as much from a delta standpoint as just, how does this thing typically move, and in putting our price there. I like that calculus better. Like in my own trading, delta is my most important thing. But in this, I'm not as focused on delta. I'm more focused on, I want to pick a strike where I'm most likely not to be in the money at some point during the day, but I've got kind of a goal where I want to try to capture 20 to 30 basis points. So I'm balancing those things.
Okay. So, 20 basis points a day. So do you have a year? What does that equal? 40 or 50%? I'm trying to think.
I think I calculated out that somewhere between 42. My 30 and 40%.
Okay. So
I want to be able to generate 30 to 40% just from option writing.
And then hopefully catch some upside in addition to that also.
Exactly. That part I can't control.
All right. Yeah, no, I get that. All right. Well, I have some more covered call questions. Let's talk about TSPY. Now that was a disruptive fund also. And I can't tell you how many good comments I've heard about that fund. I guess I didn't really realize that you were the sub-advisor. I had Cy on the show a long time ago when it first came out. I had him on a couple of times. But anyway, that I got so many good comments from that interview with him. And a lot of my guys went out and bought that fund and they love it. And just recently I figured out that you were the sub-advisor on that. Tell us that, let me ask you this. Is BITK basically the TSPY strategy? Keep unencumbered at night, sell ODTs during the day. Are you doing the same thing basically?
It is extremely similar, except Cy is using listed options. I can't, and I can't yet. I do believe that at some point soon, we're going to have Monday, Wednesday, Friday listed on IBIT. And I think it's a matter of time before you see zero DTE. But it's basically the same idea. And Cy's doing the same thing I am during the day as he's trying. Look, I'm trying to scalp a profit here. Yeah. And I'm not just blindly, I'm selling a call at 9:35 and I'm covering at 4. Because you can't do that as much. I'm also a systems guy. I'd love to, all right, can I design a system?
Yeah.
You know what? I can't. Someone's got to be looking at this all day, every day and making decisions.
You like
Cy's doing the same thing.
I got you. You're into discretionary trading more so than systematic. I mean, systems are good too. Can't you kind of be both? You can have a systematic style that also where you can override it with opinion. It sounds kind of like that's what you do. You have an idea.
Yeah, I mean, so we studied the price movements. So, we're not picking a strike out of thin air.
Yeah.
When we're looking at the daily movements, we've got a really good understanding from our systems how these things move. So, yeah, I mean, we're systematizing as much as we possibly can, but, kind of the decision of when to enter and when to exit, I haven't found a good way for a machine to do that for us.
No, I got you. So let me ask you about TDAQ. Now, TDAQ is TSPY's brother fund or sister, whatever, right? Is TDAQ the same?
Yeah, that's for the NASDAQ.
Yeah. How have you been? I noticed that you guys did a 7. I just got an email that the first, I think, payment came out and at 17%, which is pretty good. I was impressed with that.
Yeah, I mean, the thing that Cy does that I think is awesome is he's intellectually honest.
Yeah.
Because I think, the issue that the option income industry has to grapple with is we can do whatever we want. I mean, I can distribute half the fund and say we've got a gazillion% yield, and everyone is going to be like, oh my God, this is the best thing ever. But that's just, it's not intellectually honest, because as a trader, I know that doesn't make any sense.
Yeah.
But I know a lot of investors just look at that distribution yield as like the shiny object. And I think you've probably got a lot of people who play to that, and Cy doesn't.
Yeah.
Cy's 14.8% yield on TSPY. I mean, that's good, but it's not like, oh my God.
Yeah.
But that's how Cy wants it.
Yeah. No, I really enjoyed having Cy on the show, and I think I was the first show he went on. And on my channel, I kind of try to keep the fund managers in check, or I try to kind of, my theory of my channel is there's no free money. I mean, there just isn't. I've been looking for my whole life. There's no free money. So, if you're getting an 80% yield, you're having to give up something. So I built my whole channel on figuring out what that was you were giving up and showing people how that works. Being an option trader myself, I was also in the financial planning industry. I was a wealth manager in the 90s.
I was too.
So I mean,
we have a lot in common.
We do. I've been on both sides of the. I taught my guys in the 90s, or I taught one guy how to sell credit spreads. And it wasn't probably the smartest idea because of commissions, but he was sharp, and he used to sell put spreads in Dell in the 90s, and he did very well. He would buy the dip in Dell by selling a put spread. Anyway, but that was my introduction to the industry, that in my family. Let me ask you also, now you have a new line of products coming out. that you filed for, and I've seen the filing. You may not be able to comment much on them, but I would like to see what you can tell me about this income blast line of well, first of all, is BITK part of the income blast family?
Yeah, I mean, we're putting all of our zero DTEs all on one website, one place, and we'll have a few more. We have MSTK coming out, I think Thursday. It's also going to be zero DTE, same thing on MicroStrategy.
Wow.
We're going to have Tesla and NVIDIA coming out as well.
Wow.
And then the ones you referred to, those are going to be different for a couple of reasons. One thing we're doing put spreads.
I love it.
Again, like I said, I don't like covered calls unless there's zero DTE. I love selling puts.
Sure.
Worst case scenario, selling a put. I mean, you buy a stock that you love at 300 for 250.
True. No, I got you. I like puts too. I really like the new there's other funds that are doing put spreads also. But I'm excited. When I saw that income blast prospectus, I was really excited about it because I saw the put spreads.
Yeah, the problem with the other ones, though, is where's the upside? So I'm selling put spreads on a synthetic. I know. So in that way, you've got 100% upside, and actually in some cases more because you've got the premium from the put. You've got the same the only detriment is like at big downside levels, you have a little more downside with the put spread. Yeah, but at big levels, not at small levels.
At big levels, yeah. There's two funds out there that sell put spreads and own either the stock or synthetic at the same time. Okay. I'm obsessed with that strategy. Some people are calling it the lightning spread, but yeah, it's an awesome strategy to actually own the stock itself and sell a put spread. Now, is it not true? A put spread is a synthetic caller. So forget about the stock. If you just sold a put spread by itself, synthetically, you've got the stock collared. You could buy the stock, sell a call, buy a put at the same time, right?
Yeah. I mean, we like to make it somewhat simple. So we're going to have a synthetic and a put spread.
No,
we want to give you 100% upside with a yield. Yeah. The other thing we're doing that's different is we're also going to do it on thematic baskets.
That's what I want to ask you about next. Yeah, tell us about that.
Yeah, so I teach investors my investment philosophy, which I call the HEAT formula. It stands for hedges, edges, asymmetry, and themes. Okay. And the themes part, I'm a huge believer. I mean, again, we've both been around a long time. We've seen a lot of different things. I believe this market is now thematic, and I don't think it's going back. I think, there have been a lot of things structurally that have happened where it's all about the themes. Yeah. And so what we want to do is pick out, all right, well, what are the big themes? AI infrastructure, nuclear, drones, robotics, AI healthcare, space,
DeFi,
on and on.
What's that? What about DeFi, decentralized finance? Is that one of your themes?
That will be in there. I need some more stocks to go into that. So we looked at creating a stable coin index, and it's really Circle and maybe MasterCard and Visa. There's not enough there yet, but we'll definitely be on top of that. So we're going to have synthetics. We might have a basket of, let's say, 20 names in that theme, all with synthetic longs and put spreads underneath each one of them. So you'll get the thematic return. And I mean, God knows what kind of yield that. I mean, you look at some of these nuclear names like Oklo and SMR. Yeah. I mean, who knows? I mean, that's going to be a massive yield just from the option premiums.
Probably 80, 90, 100% or something. There's other people that are doing that, or you think more?
I mean, it could be more. I've not run the numbers. I was running the numbers on some single names, and I was getting, 100%.
Sure. Well, I was thinking of a basket of 20, and I was thinking of another fund that pays around that, one of your competitors that pays around that much using similar stocks. But yeah, it's going to be huge. It's going to be huge, and I love the idea of the fully uncapped upside. Where I was going with earlier, when I said a put spread's just a caller. Okay, that's great. You guys aren't doing just a put spread. You're doing a put spread and owning the stock at the same time. So you got the stock collared, and that's your income component. But then also in the same investment, you have the stock long, which is just unencumbered to go wherever it wants to go. That's where I was trying to go with that. Let me talk to you about this. The heat. I wanted to give you a chance to promote your upcoming seminar. I'm going to be there on Thursday. I'm really looking forward to it. I get your newsletter, and I love your newsletter, especially the part about hedges. Last week you wrote a great. They're always good, but I really like the one last week. We were showing people how to do ratio spreads and how different ways to hedge. I love that. I'd recommend that to anybody. But would you like to tell people about the seminar? And I think it's free, and I'm going to be there.
Yeah. So it is. What is it? Thursday?
I think it's Thursday.
I'm doing another webinar for Webull tomorrow. So yeah, it's Thursday at 2:00, and we're talking about covered calls. Where's the upside? How distribution yield can kind of mask what's going on in some alternatives. And yeah, it's free for anyone to attend. I don't know the link off the top of my head, but if you go to my Twitter page, which is, what am I on Twitter? I always forget what I'm on Twitter. At Tuttle Capital, you'll see the announcement on there.
I'm having my moderator get the link, and then I'll put it in.
All right, cool. Thank you.
And I'll put it in the thing. Yeah, I just texted him. All right. Well, yes, I'm very excited about that. Let me. I had some questions from some people in my room. This I thought was interesting. As a financial commentator, you have a pretty good, X profile, and we see you on TV and all kinds of places. As a financial commentator active on X, how has social media shaped the market dynamics, especially as far as AI infrastructure goes and volatility spikes?
I think it is huge what social media is doing. So we were both around during the internet bubble. Mm-hmm. And, at that time, individual investors got into these internet stocks. The difference is the technology wasn't there for them to really connect with each other. And the technology wasn't there for them to trade on their own. So they relied on brokers for information, for trading, for all of that. And I mean, I saw it. A lot of them got crushed.
Yeah, me too.
And Wall Street went and said, hey, silly investor, just buy our actively managed index hugging stuff, pay our 2% fees, and earn 8 to 12% a year and be happy.
Sure.
Then COVID came. And all of a sudden, everyone who was working in an office with a boss over them is sitting at home, and they start trading, and they start getting connected. And then they realize, you know what? The smart money isn't that smart. And they realize we can band together, and we can take down a hedge fund. Yeah. And it just morphed from there into now you've got the discords, and the discords are connected, and these guys are on top of themes before the so-called smart money. So I was talking to a hedge fund manager a couple months back. He's like, hey, we just found these nuclear stocks. Like, dude, I'm taking profits already. You just found nuclear stocks? But I think it's amazing. These individual investors are ahead of the game. And I think what's happened is, whereas back in the GameStop saga, the hedge funds are like, no, we're going to short these companies. Now they're like, all right, what is retail buying? And we're going to buy those same names. And that's one of the reasons why I think this market has gotten so thematic, is retail guys are seeing these themes. Instead of the hedge fund guys saying, oh, this company has no earnings, I'm going to short it. They're saying, hey, retail's buying it, we're going to buy it.
Yeah. No, I get that. I have a bunch more. I could talk to you about covered calls and option strategies all day long. I like to get into risk reversals and covered call spreads and all kinds of stuff, but I don't want to mess up too much stuff from your seminar. Plus, I have the idea that other people may not be as interested in the intricacies of the options as I am. So I'm going to try to.
How could you not be? Come on.
Yeah, I know it. But the guys the guys that are listening to this probably are. That's kind of what I've courted in my Discord and in my social media. But I wanted to give some other guys a chance. If there's anyone in the comments that wants to put a reasonable question up there for Matthew, I'm sure he'd be happy to take it.
Oh, yeah, totally.
Let me see if we have any reasonable questions yet. Yeah, this is a good one. This is from one of my favorite viewers. Anyway, it says, with all the XRP ETFs about to hit the market and a chance of XRP ETF data center flex call ETF, I believe the volatility will be perfect for flex option. It wasn't really a question. Okay. Well, but it was made me think of a question. What do you guys think about maybe instead of just having a Bitcoin fund, are you going to come out with an Ether fund and an XRP?
We filed for I think we did like 10 of the biggest cryptos to be able to do funds on those as well. The ETF rules around crypto are still archaic. We've got an SEC that when they go back to work is more open to crypto than we've ever seen. Yeah. But a lot of the rules are still archaic. So at this point, I couldn't launch a fund that said, all right, we're buying XRP and we're writing calls on it or we're doing puts on it. It's going to be much easier for me to do that using one of the XRP ETFs.
Well, of course, I didn't mean, I meant indirectly but yeah, I guess
right. In a perfect world, one day,
yeah,
I'll probably be launching XRP ETFs where we're doing some sort of options. We're also going to be doing 2X in, so we already have a 2X Bitcoin and a 2X Ether. We're going to be doing Solana, XRP, Doge,
nice.
Something else which is escaping me at the moment. And there's a whole bunch. We've got a partnership with another group whose name you would know that I can't say at the moment, where we're going to be doing a lot of crypto stuff with those guys. And then another group whose name you would know that we're doing a lot of. So we're doing a lot in crypto.
I got you. All right. Here's a good question. Any ideas to have a fund to fund like other people in the future once the Tuttle universe gets made? Do you have fund to fund aspirations?
I don't really like the idea of fund to funds. Again, remember back in the old days, you'd have like the balanced fund. And it's like, I don't want your balanced fund. I want to pick the stock fund. I want to pick the bond fund. I don't want your mix. Yeah. So like intellectually, I would rather say, hey, we've got, IBIT, MicroStrategy, NVIDIA, Palantir, and you decide which ones you want. Supply and demand. If people are coming to me like, oh, no, I want you to pick. All right, fine. We'll do it. But I would much rather say, hey, here's what we got. And you decide which stocks you like in which, increments.
In which how much you want to allocate to each one of them.
Yeah.
No, absolutely. Absolutely. I get it. All right. Let's look for some other reasonable questions. But this is just a comment, but Dan saying he's a big fan of NVIDIA, as am I, but as a lot of people, but that's going to be, I think that's really exciting. The ODTE, Tesla, NVIDIA, and I had no idea that caught me by surprise. I hadn't seen that on the SEC yet. I have somebody that looks at the SEC every day and sends stuff to me, but I hadn't seen that one. That's going to be really exciting. So you're using flex options to turn like MicroStrategies into an ODTE machine.
Exactly. And then same with Tesla, same with NVIDIA. And then we've got some behind that if this is a success, yeah, we may launch those as well.
Absolutely. Absolutely. Well, I think that's really exciting. This one mentions one of your competitors, but it's from one of my favorite commenters, from Norman out in California. He's saying, are you considering, but you did mention You did mention that you want to do thematic baskets, so that would be similar to this fund. Would be
well, no. So we also filed for Mimi. I think it's MEMY. So
Oh, I saw
we're
that.
going to do that idea. We're going to do it with put spreads.
Perfect.
And and really, so I'm really in tune with what's going on with the retail guys. I've got like 6 Discords and Twitter up. I've got 7 screens. And so, but I've got like the smart guys Discords. Those guys get on this stuff before other people do. And that's the stuff we're going to put in Mimi.
No, that's awesome. No, I can't wait to see that. And I guess I did see Mimi. It was part of the Income Blast SEC filing, I think.
Yeah.
I should have known that. My bad on that. Okay. Perfect. That is awesome. Okay, here's a comment from somebody that's reasonable. Let's just see what it says. Thanks, Matt. The reason why baskets are becoming a portion of the audience works in finance, and we are banned.
I'm reading that. I had not thought of that. That's interesting.
Yeah,
I will take that under consideration. I hadn't thought of it like that.
I hadn't thought of that either.
Yeah, and one of the reasons for my bias. So we launched an ETF BEGS, Bitcoin, Ether, Gold, and Silver. It's 75% Bitcoin, 75% gold, 25% Ether, 25% silver, and we launched it almost the perfect time. I mean, the thing's like double. The performance is insane. And I mean, it's not because we're such great managers. It's all of that stuff has gone up and it's been parabolic, but it's not catching on. And I'm kind of sitting there thinking, probably not catching on because people are out there thinking, well, I just want Bitcoin. I just want Ether. I want gold. I want silver. If I want a mix, I want a different mix. So that's where some of my bias comes from, because I really did think that would catch on and it hasn't.
Yeah, well, for whatever reason, I didn't find out about it until I was researching for this interview, but that's a really interesting fund to me, that BEGS. I've never even heard of Rareview. Who's Rareview? There's so many companies popping up, and I do this every day, and sometimes something will surprise me.
Yeah, Rareview. So one of the things we like to do, we launch our own ETFs, but we like to partner with innovative guys doing interesting stuff that we want to be a part of. So
like
Rareview, like Psy. I mean, we love Psy. Rareview is run by a guy, Neil Azus. Neil used to work at Goldman. He's amazingly smart. If you ever have him on your podcast, you'll need 3 hours because Neil does talk. I've never had a 5-minute conversation with Neil, but Neil is brilliant. And, BEGS was his idea. And I was like, I love it. Let's go. Let's work on that together.
So when you say partner with, is that another word for subadvise, or is it more?
Sometimes we subadvise, sometimes we're the advisor. It's whatever makes sense. If it makes sense to put our name on it, we will.
Sure.
Sometimes it makes sense not to put our name on it. I'm flexible. I'm an entrepreneur.
Yeah.
I want to work on projects that I like with people I like, and I want it to make sense. I don't need to see my name on there if my name doesn't add. If my name adds, throw my name on there.
Yeah, no, great philosophy. Let me ask you this. Yeah, hopefully I will be able to get, what was his name at Rareview? I need to ask him to be on. What's his name again?
Yeah, Neil Azus.
Okay, I'm gonna send him an email. What was I gonna ask you? Well, let's see if we have any other questions. Oh, here's one from Steven. You'd mentioned nuclear earlier. Looking at your website, I don't see anything. Is that something that's planned?
It is something that's planned. So it'll be a nuclear basket with put spreads underneath. Hopefully that will be out, December-ish.
I'm wondering, I think put spreads are just such a superior plan. I wonder why people use calls anymore. But actually, I don't wonder. And I mean, isn't it true just from a philosophical standpoint that the covered call does have an advantage in a flat market or a pullback, especially in a pullback?
It depends on the amount of the pullback.
True.
Because if it pulls back, but it's still over your strike in a put, I still like the put because your put's still going to expire worthless. It's really, once you get a major pullback that, maybe that will, but a flat market, you're still making money off the puts.
That's true. That's true. And let me ask you this though. Some of your competitors are I think a lot of people are trying to solve the same problem. Hey, covered calls are great. The income's great, but they have some disadvantages. And so investors like yourself have come up with different methods. There's other people doing covered call spreads. Do you think that alleviates any of the problem? Or I'm guessing no.
So, yeah. I mean, some, not all. So, for example, there is one fund that I guess will remain nameless that I was going to do. I started running the numbers. I'm like, I'm going to do a strategy that's 100% long the underlying and 100% short them. And I looked at it last year, that fund would have been up 75%. So they underperformed the underlying by more than 75%, but I'm taking into account borrow costs and all that stuff. This year, it would have been near flat. And the difference is this year they added in, the underlying didn't move as much. If it had moved as much, it would have been different. But they also added in the call spread. So I think that helps.
Yeah.
It harms income.
True.
So, you've got an issue there. But it helps somewhat. To me, it still doesn't alleviate the problem. I'd rather do puts.
It also harms your downside buffer a little bit. If you're only bringing in 0.5% instead of 1%, that you guys get it. I mean, I know you get it, and everyone that's listening gets it.
Yeah, I mean, it's like you're plugging the dike. You plug one hole, but you created another one.
Yeah. Well, but I think there's a reason for that too. That even the put spread strategy isn't without drawbacks. I mean, everything because there's no such thing as free money. You're going to have to decide. You're going to have to.
Right. In the put spread, the drawback comes on big downturns.
Yeah.
You're grabbing a bit more of that upside.
Yeah.
So, but the trader in me is looking at it like, but I'm buying this with the expectation that it's going up.
Absolutely.
And me personally, I'm going to take care of my own downside. So I'm going to watch. I think it's going to go up. If I'm wrong, I'm going to get out.
Yeah.
So again, that's me. That's the trader mindset. I'm not going to just ride something down. And so for me, I'm willing to say, because the A in the heat formula is asymmetry. I love asymmetric trades. Yeah. And a covered call is not an asymmetric trade. It is limited upside, unlimited downside.
It's the reverse of asymmetric, or it's asymmetric in the wrong direction.
It is asymmetric in the wrong direction, which is why not only do I write puts, but I buy calls, because buying calls is the perfect asymmetric trade. Absolutely. I buy a call for $2,000. My downside's $2,000. My upside's unlimited. Well, I love that trade.
Yeah, no, I do too. One of my favorite trades is the poor man's covered call, or just diagonals. Why hasn't somebody done a call diagonal thing yet, where you're just essentially where you own calls in the 2 months away or something, and you're selling weekly calls against it to support the calls you own. I would love to see.
I mean, we're gonna once we get this stuff out and see if we get traction, we're gonna do a lot more. I mean, I personally run a 0 DTE SPY put strategy in my personal account. It's complicated. I don't know that I could necessarily you can, all this stuff we're talking about, I can explain in 5 seconds and anyone's going to get it. That's not something I can explain in 5 seconds. So, do I keep it just in my personal account, or do I do something or a derivation of that? Now, one of the complicated things we're going to do, you mentioned hedging. So hopefully, and it'll probably be January, February, we're going to have oh no and oh yes out.
Really? Tell us about that.
So oh no is no bleed tail risk. So you were talking about my newsletter about ratio spreads and put spreads. That plus a whole lot more is going to be an oh no. So the idea is the 99% of the time the market's up, we're going to be pretty close to the flat line. And then market blows up, we're going to do really, really well. I love that. So that to me is the problem with tail risk, is you bleed so much, you get to a point where I can't keep this in my portfolio. My clients are screaming at me and the market never wants to go down, and you sell right before the market goes down.
Every time but yeah, the bleeding. So it's going to be like a no bleed fund. So I assume you're going to use put ratio spreads.
We're going to use ratio spreads, put spreads, some stuff on volatility, all sorts of things. I have a very big and sophisticated investment bank whose name I cannot mention, who's helping me with it. And then they actually mentioned, oh yes, which I had not thought of, but they said, hey, Matt,
the opposite.
If we combine 100% S&P with 100% tail risk, we get something that has the same volatility as the S&P, outperforms by 6% a year, and in 2008 would have been up. All right.
Yeah. No, I can't wait for that. Those are the kinds of funds I've asked every manager I've spoken to some version of why can't they do some type of long vol ETF,
because they're not traders. They're not thinking of this stuff. This is stuff I'm doing in my personal account.
Yeah, I hear you. No, that's so that's going to be called oh yes and oh no. And
I'm still making sure I can reserve the symbol oh yes. Hopefully someone doesn't beat me to it.
I hear you.
Yeah, and I hadn't thought of that. My guys who were working on this just sent me an IB this morning. They're like, hey, how is oh yes going? I'm like, what's oh yeah? Oh, I like that.
Heck yeah. No, I'm really excited. The guys in my comment section are saying my head's going to explode, because that's the kind of stuff I've been asking for the whole time. Like you say, we obviously have a lot of similarities. That's why I named myself Max Convexity. I'm a frustrated volatility trader.
So one other thing I filed for, and we'll see if I do.
Yeah.
So I am a big believer that the VIX exchange traded products are some of the worst designed investments ever. So one of the things I talk about is the E in heat formulas edges. And I think you have an edge buying puts on the VIX exchange traded products, not selling them short because you're going to get carried out on a stretcher at some point.
Sure.
But buying puts on them, especially when they spike. So the other day, volatility spiked. I bought some UVIXI puts. I sold them yesterday, made like 50%. Nice, easy, simple, as close to free money as you can find, because VIX needs a reason to stay elevated, unlike stocks. And the VIX ETPs, because of contango, they're designed to go to zero. If they didn't reverse split these things like every couple of months, they'd be trading at fractions of a cent.
Oh, of course.
So what I did is I filed for it, and I can launch at any time. I don't meet enough guys who like volatility like you.
Yeah.
I am doing, 2x short VIX, but using options. So the idea is I can take 60 or so % of the portfolio, buy puts to approximate a 2x short. Rest goes into treasuries. If we have a Volmageddon, I'm bleeding profusely, but I'm still alive. We don't go to zero because I still have 40% in T-bills, and my options probably still have value.
No, exactly. That's incredible. Yeah, that's the best news I've heard all day. But like I said,
if I get some interest, I will launch those. I just don't know if there are enough option geeks. I'm almost always have puts on the VIX ETPs. I don't know if there are enough other people who do that as well.
Now that's really fascinating to me. Well, guys, in the comments, ask some more questions if you guys got any, because I'm out of questions. We still have 12 more minutes with Matthew. If you guys have any questions, put them in the comments. No, I'm really excited about the put spread. The thing I'm most excited about in this whole industry is selling put spreads at the same time you own the underlying in some manner. I think that's going to be huge. But that was the thing I was most excited about until I heard about your no bleed long volatility fund. That's going to, what's really exciting is the oh yes could work also. I mean, or in theory.
I had never thought of the oh yes, and I had these guys in my office giving me a presentation, and they're like, wait, take a look at this slide. And I'm looking at it, I'm like, what the heck is that? Yeah. I mean, it is a straight line up compared to the S&P, which is not a straight line up. Like, they're like, yeah, that's 100% S&P and 100% oh no. all right, sign me up. I'm in.
So help me in my own. How do you manage put ratio spreads? I mean, like, how do you deal with the valley of death? I mean, I'm always looking for rules and somewhat mechanized systems. Sometimes I use whenever I've lost half of the total value. I mean, the bottom of the valley of death, if it's $1,000 risk, if I lose 500, I'm out. I've tried it that way before, but I just have a hard time. I mean, the put ratio spreads look so good on paper, but I always land in the
so what I like to do is I combine them with outright puts or put spreads.
Okay.
So, the idea with a ratio spread is whatever it is goes down big, you're great.
Yeah.
Whatever it is goes up, you break even. It's that middle area where you're screwed. That's where I add in the put spreads because they're making money in that middle area.
But of course, then they're capped. But then, so if it really drops, your put spread pays off, and then your next stage of protection.
And then the next stage, and that's where I'm willing to accept a little bleed because I'm putting them in my portfolio. Where if the market goes up, all right, I've got a little bleed on my tail risk. Yeah. But everything else in my portfolio is going up. I don't care.
Absolutely. Have you heard of a guy named Chris Cole? He's from Austin. He has something called
the Dragon Portfolio.
The Dragon Portfolio. He talks about, I think his hedge funds out of business or whatever, but I think ETFs have been putting a lot of hedge funds out of business, or I don't know if that's what happened. But anyway, he always talks about a long volatility strategy that he developed in his apartment or back in San Diego or wherever, Santa Monica. And he talks about how they'll forego the first little down move to try to catch the big down move. But it's some kind of, I've always tried to figure out what he's doing, but I think it's what you just described. I bet he has some type of layer protection, put spreads.
Probably.
And I also think maybe, I wonder, have you ever thought about parlaying? I also thought maybe he means he buys puts or put spreads. And if the market moves down a little bit, he'll cash the put spread in and then roll it out and let it all ride and just try to go for either even. Have you ever tried to parlay that or looked into parlaying?
So, when you're running a hedge fund versus an ETF, it's different.
Okay.
And, you've got to, in the ETF, really deliver what it is you're saying you deliver. And so when we were designing Ono, for example, it's a balancing act of, how sensitive do I want to be? Because, at what point are people pissed?
Yeah.
So how much, if the market's down 1% and you're not up 1%, it's like, all right, I can weather that storm. Someone sends me an email. Yeah, I can answer that. All right, you're down 10%. Market's down 10 and you're flat. No, that's not, I know my phone's going to be blowing up. My email is going to be blowing up.
Oh yeah.
I can't weather that storm. If the market's down 10, I got to be up 5 or,
Absolutely.
I got to be, whatever. And it's that balancing act when you're doing it in an ETF versus, in your personal account, you can get cute. Yeah. Because all you have to answer to is yourself or maybe your spouse. Yeah, I screwed that trade up. Oops. Yeah, I learned a lesson. Oh, that didn't work.
Yeah.
And in ETF, you don't get a mulligan.
Also, isn't part of the problem, you have to file a plan in advance. SEC has to approve it and you have to stick to it kind of. I mean, so
you can make it pretty flexible.
Okay.
And just one caveat, the SEC never approves. The SEC just stops asking you questions.
Okay.
And then you're ready to go effective. Yeah, the SEC never approves or disapproves of anything.
Well, I think
I've launched a bunch of ETFs that the SEC has disapproved of.
Yeah.
But we met all the requirements, so we were able to launch them.
No, that's awesome. I think you may have already answered this, but it says, hey guys, how about some new interesting thematic income ETFs? We're
going to go there and we're going to be watching. I mean, that's what I do. I watch for themes. That's what I do in my personal portfolio. Then I want to make sure that, they're investable and, and they're themes that'll be around for a while. Yeah, I'm writing in my newsletter tomorrow a theme I hadn't really thought of that's really interesting to me right now, which is longevity. I mean, I do a podcast. We just had a longevity guy on. He's like, within 10 years or so, our life expectancies could double because we're going to be able to replace anything on us that goes wrong. And if we can do that, theoretically, you're not breaking down. But that becomes a game changer.
No, I've heard about that theme. I was going to ask you, what is the one theme that we aren't thinking about that we need to be? But no, I think that answers the question.
Oh no, I'll give you another one.
Give me another one.
The tinfoil hat. So
okay.
I filed for an ETF. The symbol is UFOD.
Okay.
So it's for UFO disclosure. So the idea, and Congress is having hearings, and they've been having hearings for a while, and whistleblowers keep coming forward saying we're sitting on world-changing technology.
Yeah.
If that technology ever gets released, that changes everything. So we're going to have an ETF that will say, all right, if that technology ever gets released, what companies are most likely to benefit? And then the flexibility, if it actually does get released, we'll be able to short the companies that are going to get crushed, which would be the oil companies and the utilities and things like that.
You thinking free energy? Is that what you're thinking? That's kind of what I'm thinking, that it would be something.
I think we've had free energy for 100 years.
I've heard that.
It's been under wraps.
Yeah.
If you want to go down a rabbit hole, look at all the people throughout the years who have invented free energy and look at what happens to them after.
No,
none of them end well.
No, I know it. I've been down every rabbit hole. That's definitely one of them. Somebody brought up in the comments, what about ICLN? In other words,
I don't think that's a theme right now.
Okay.
I think you've got, number one, you've got an administration who's not that interested.
True.
I do think AI, from a power perspective, it's all of the above.
Yeah.
We're going to need solar. We're going to need all that stuff. On the energy side, where it gets interesting, and I don't know how far away we are from this, but putting a solar panel in space, taking that energy from the sun and beaming it down to Earth, we will have that technology at some point, and that's probably the ultimate clean energy. But I mean, we could be 10 years, 20 years away from that. I have no idea.
Absolutely. We'd be 20 years away from that, and we could be living to 150. I don't know if that's going to be in time to help people that are our age, but maybe our children or maybe.
What I'm told is if you and I can live another 10 years, we're in.
Wow.
So just, watch what you eat, clean living for the next 10 years, and you're good.
Well, I got off to a little rough start from my 20 to 40, but whatever. I may have cost myself a few years, but with misspent youth. But anyway, no. Hopefully we're in good shape now. That's awesome. Well, Matthew, I've really enjoyed having you on the show. We've about run out of time. It's 2:58. You mentioned that you could stay around longer, but we're also running out of questions. But I would love to have you on some other time, especially maybe. To coincide with when a fund's coming out, or maybe.
Definitely.
I mean, I would love to have you on. I think that my audience and your funds make a pretty good mix. So
sounds good to me. Happy to come on anytime. I love talking to individual investors directly.
Well, thank you so much. Hang out here for just a second, Matt. I want to say one more thing to you, but I'm going to say bye to the stream. All right, guys on YouTube, thank you so much for watching the show. Thank you for commenting. Thank you for all the people in Discord that gave me question suggestions. I appreciate that. I'm going to end this stream here. I'll talk to you guys in a while. I'm going to speak with Matthew for a second. Later.